The battle for dominance in India's physical retail space has seen many casualties. Even the likes of Aditya Birla Group and Godrej Group, which are among the country's largest conglomerates, had to pack their bags and leave. In 2018, the Aditya Birla Group sold its More supermarket chain to Samara Capital and Amazon. Then, in 2019, the Godrej Group offloaded its grocery outlets under the Nature's Basket brand to Spencer's Retail. Let us take one more recent example. With more than 1500 stores, Future Retail was once India's second largest retailer. Now, Future Retail, along with other group companies, is being taken to the National Company Law Tribunal as lenders seek to recover their dues under the Insolvency and Bankruptcy Code. This leaves Reliance Retail and Avenue Supermarts run D-Mart as India's top retailers. However, the going has been just as tough, if not more, for foreign firms, particularly in the cash and carry segment. According to a recent report by One Financial Daily, Amazon, Reliance Retail, Avenue Supermarts, Tata Group, Lulu Group, and Samara Capital are among those looking to buy German retailer Metro AG's Indian cash and carry operations for anywhere between 1.5 to 1.75 billion dollars. Metro has been running a chain of 31 cash and carry stores across India since 2003. According to the report, the decision to cash out came after intense competition and the large investments needed to sustain operations forced the company to carry out a detailed business review. In 2020, Reuters reported that Walmart Inc., the world's largest retailer, had fired 56 of its executives in India. The move, according to the agency, underscored the challenges Walmart was facing in expanding its wholesale business in India. Carrefour, one of the largest retail chains in the world, had also exited India in 2014, less than 4 years after it had opened its first store in the country. According to a report from March this year, a top official at the American retail giant Walmart said that the company was not keen on opening direct-to-consumer physical stores in India. Instead, it would focus on growing its acquisitions, which are online marketplace Flipkart and payments major PhonePe. In 2019, Amazon invested close to 1500 crore rupees for a 49% stake in Future Retail's promoter entity Future Coupons, thus indirectly gaining a 4.8% stake in the former. Amazon's aim was to expand its foothold in India's retail market, but it didn't happen. As a previous morning show story had explained, companies like Amazon face more hurdles when it comes to tapping India's retail consumer base. This is because foreign investment in offline multi-brand retail is tightly controlled. India allows 51% FDI in multi-brand retail under the government route, but this is subject to the investor fulfilling several conditions. Meanwhile, the states can also decide whether to allow foreign-owned multi-brand stores or not. Under Indian rules, 100% foreign investment is allowed in wholesale and cash and carry operations. There's a growing realization that retail, whether B2B and cash and carry, or directly reaching the consumers, requires a local model where local considerations outweigh everything else. For example, cash and carry can be a complex proposition because of the low margin nature of the business. Add to that the steep real estate prices in India. In some cases, intricacies like zeroing in on the right store size can prove to be a challenge, and a wrong call can be disastrous in this hyper-competitive market. Then there is the nature of the Indian buyer, for whom discounts are a primary expectation. So, why has India been a challenging market for foreign retail giants?
But if I were to look specifically at some of the articles around what's happening with Metro right now and their possibility of selling their Indian wholesale business, I think that has more to do with the current state of the competition, right? I think we're seeing a lot of activity on the retail front. Reliance clearly is the big player. And what they have done in the past couple of years with JioMart and opening their own wholesale centers, I think has been truly disruptive. right? And I think, therefore, just looking at the kind of tough competitive environment, looking at some degree of headwinds from both regulatory and the small retail, and kind of given pricing pressures with a whole swathe of consumers, kind of relying quite equally on e-commerce players, is actually making it tough for some of the global, let's say, retail wholesale players in the Indian market. I think Reliance has a kind of triple advantage in the retail play. I think one is obviously the strength of their last mile connectivity. The fact that they're also a telecom player, they've created the JioMart, they've got upwards of 350 million consumers directly connected through their telecom networks. I think that's let's say one issue, one big advantage. I think second is that what Reliance has been doing over the last couple of years is they've been investing on building wholesale centers for food, for grocery, for apparel, for electronics, and for medicines across the country, right? And what they hope to do is to open millions of small shops, onto this kind of e-commerce platform that they call JioMart. So I think that's one of the second big advantage. And the third is really the fact that they're looking at taking on board more than 10 million merchant partners over the next 3 years, right? So I think the kind of the fact that Reliance has got all three ends tied up, the consumer end, the small retailer end, and building the wholesale centers, is a significant competitive advantage versus what any global player can do. And to top it up, the fact that Reliance's ability to manage regulatory issues, right, both at a kind of policy making level, but also at a more local market disruptor level from retail associations and such like, is far ahead of what any global player is capable of. So I think that, to my mind, is one big inhibitor for any global player.
Also, what do their future options look like?
So I think the case for bulk buying of household provisions, driving to the nearest wholesaler, I think that concept has not really picked up to the extent possible. So their core market was the small retailer going to the wholesaler to pick it up. Now with large disruptors like Reliance coming in, I think even that part of the business is beginning to play out, right? So I think the pricing pressure, single digit or negative EBITDAs, handling a tough regulatory framework, looking at small time market disruptions on the ground, and the onslaught of the growth of e-commerce together has put global wholesalers completely on the back foot.
According to Forrester Research, India's retail market was worth $883 billion in 2020. The market size is expected to grow to $1.3 trillion by 2024. It is an attractive market, but one which requires deep pockets and the ability to fight stiff competition from behemoths like Reliance.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.